Alright traders, I am back again with another video. In this video we want to talk about a trade opportunity which is going to be featuring the Euro New Zealand dollar, and it's going to be a Kumo breakout trade. But before I get to discussing that trade, I want to look at just a small smidgen of multiple time frame analysis, basically dealing with looking at your daily time frame and trading the bias of the daily based off of Ichimoku and being under the cloud and so forth. Now I do go deeper than that when we talk more about this stuff on my video course, but this is enough right here that's going to keep you doing the right thing and trading to the right direction. So I want to touch on this so that you understand what we're looking for when we look at breakouts. And also I'm going to talk about my stop loss and where I'm using my stop loss, quite possibly, because a lot of times people don't give the market enough room to move, and you have to have a technical stop loss, in my opinion. You can't set a stop loss based off of how much you can afford, saying you can afford a 30 pip stop loss, so that's what you're going to put. If that's the case, then you probably don't want to take that trade until you can find a trade that is going to be technically sound with the 30 pip stop loss. Not a stop loss that you're saying I can afford this much, and if the market moves that far, I'm out. That really doesn't make a lot of sense, because the market can move that far based off of, you know, support and resistance and technical aspects of the market. All right, so we're looking here at the Euro New Zealand dollar daily time frame. So what I want to show you here is this red dashed line. When I see this red dashed line, that's where the market went below the cloud on the daily time frame. So that's making this a bearish bias, and this green dashed line is where it went above the cloud on the daily time frame. So it turns from a bearish bias to a bullish bias. Now on the lower time frame, it's going to turn to a bullish bias before it turns to a bullish bias on the daily, and vice versa. If it's going to turn to a bearish bias, it'll turn to a bearish bias first, say the 4-hour time frame, because that's the time frame that we're going to be looking at. So sometime you may get caught in an area where this doesn't work all the time for you, because nothing I give you is 100% precise, but this is really good. Now the thing is, when the market does change that direction, as here, you're going to get a breakout on the 4-hour time frame, and we'll see that, and it's going to be a good breakout before you ever get a chance to change direction based off of the daily. So what I want to do is just follow my daily bias throughout. All right, and that's going to pretty much keep me on the safe side of Kumo breakouts, period. Let me go to show you this. So look, when we get to the 4-hour time frame here, look, we're going to look at this line and this line. So between this point here, from here to here, we never want to take a Kumo breakout to the upside. We always want to take everything trading to the downside. So we only want to take short trades. So if we get a breakout to the upside on the 4-hour time frame on the Ichimoku system, we don't want to take that trade. So then I'm going to go back, I'm going to go over to here, and this is where it's going to start looking at our trade that we're going to get to talking about shortly here, okay? Because we're looking at a breakout, and it's going to be based off of this area. Now this is another area, and I do a lot of trading with fractals, and these fractals are telling me that quite possibly I may be seeing a change of direction. All right, so what we're looking at here may not fall, because you could see the market do something like this. Continue to the upside. So we would be catching it. You'll see this on the 4-hour time frame before you see that on the daily time frame. This daily breakout here, well, you probably got a 4-hour breakout that's down here somewhere that's already happened. Maybe it's even already happened. All right, so we'll figure that out, but let's look to see how we understand this, basically understand how to do this. Not really multiple time frame analysis, but yes, multiple time frame analysis, understanding how to trade the bias of the daily. All right, so let's go now. This is our daily chart. Let's go to the 4-hour chart. So now we're going to our 4-hour chart. We're going to go back to those red lines that we saw. All right, so we're going to go back to the red line that we saw over here. And this is the green line, so I'll talk about that in a minute. So that red line started back here. So this is where the market went below the Kumo on the daily time frame. So to this point, I'm going to zoom in here so we could see this much better, and we'll look at this and understand what's happening here. All right, so all the way here we had from this point on, we want to be trading to the downside. So what we don't want to do is take any breakouts to the upside. Here was a Kumo breakout to the upside. We don't want to take it, but it was probably not valid anyway. All right, and we want to catch trades to the downside. So with all these trades, there's a ton of trades here that we could look at trading to the downside based off of this daily time frame and Ichimoku, and bounces off of the Kijin-sen and Tenkan-sen and off of the cloud, and price action trades that we can take at certain points on this chart. But we're not going to get into that. We're going to get deeper into the Kumo breakout situations that we don't want to be taking anything long. So we don't take this trade here. And there's not a lot of breakouts that are going to be to the upside here. Then you see there's another bounce off of the cloud. There's a bounce off of the cloud, bounce off of the Kijin-sen. Tons of bounces off of your Tenkan-sen. We have a Kijin-sen breaks here. Then we have fractal breaks. And then we have the market going pretty much sideways. This is an ugly market. I wouldn't be trying to trade anything here. But you had the market go above the cloud on the 4-hour time frame. You don't want to take any of those trades. All right. But then we had the market come below the cloud here for a Kumo breakout to the downside. And that's what we want to be trading, the downside breakouts, because that's what we're following, that daily bias. All right. And then we have a ton of trades here throughout that we could get into if we didn't catch the breakout here. But you can learn all about these kinds of trades and how to trade them and what to look for if you become a member. You become a member and you'll learn all of these trades that we talk about taking and learning how to take. And then we see here another breakout. We had a Kumo breakout to the upside. We definitely don't want to take that, but that looks like it was news driven. And then here was another breakout. Now this was a good breakout, but we still want to stay trading safely. We want to have something that's going to keep us safe. So all along we don't take this breakout here. Okay, so the market moves, continues, then we get a breakout to the downside, then there you go, the market's going to the downside. And now here's where the market did break out to the upside before it broke out on the cloud to the upside on the daily. So you would have missed this breakout here, but you would have start looking to trade long from this point on. And there's tons of trades we could again look for taking off of the daily time frame, off of Kijin-sen bounces, TK crossovers, fractal breaks and bounces, all kinds of trades that we could get into here. All right, so from this point on we want to be trading long. All right, now I'm not going to go back and look at this per se. We don't really need to see how that looks on the daily time frame. All right, so now what I'm going to do is go back to the daily. So we looked at the market from this point to this point, and we didn't want to take any breakouts. This is probably that long big move to the upside. Okay, so let's mark that and see exactly what that is. That's probably that long big move. So we don't even have to really mark it. We know that it's that. It's that long big move that we saw just before we had the breakout here. All right, so we don't want to be taking that breakout. So now we're going to look, go back here. We're going to go to the current market and what we see now, looking at our trade here. All right, so I was talking about the moves here. Now this system is acting crazy. Let me get it back for us. All right, so there we go. So now this line here represents where we should be trading short all the time based off of the daily. So if I bring the daily back up, you'll see what I'm talking about. So this is where the market went below the Kumo on the daily. Now I didn't mark all this stuff in here. I didn't mark it. I just wanted to show you from this point to this point. All right, but we would have marked all these other levels, but you can see the market's pretty sideways here. So Ichimoku doesn't do well in a sideways market. So it's for a trending market. You want to catch trends like this up here, and possibly trends like this right here. So you could see from this point on, we want to be trading to the downside. All right. Now there's some signs on here that are telling me that we may be seeing a change of direction. All right. And we use a lot of fractals to determine the market structure and change of direction and things of that nature. But we're going to just use Ichimoku today, and that's all we're using pretty much. So we're going to look at this breakout that we're going to see on the 4-hour time frame. So let me zoom in here. So as I said, you could see here, this is where we're saying the market is staying below the Kumo cloud on the daily time frame. So from this point to wherever it goes back above the cloud, we want to trade short on our lower time frame, which would be our 4-hour time frame, because that's the time frame I'm going to be trading with. So we're on the daily. Let's go to the 4-hour. So let me show you that line again, and you could see what I'm looking at. This is the line. From this point on, I want to be trading short no matter what. All right, so I don't want to take any Kumo breakouts to the upside, and there really weren't any. All right, so that was a good thing, that there were no breakouts to the upside. Well, actually, yeah, there is one. There's a breakout right here to the upside. Now, this was a really good breakout. All right, but you can't catch everything and you can't trade everything. So to be safe, we wouldn't have taken this trade. But now, I was talking to you about change of direction with fractals and everything. So that's what I'm kind of seeing quite possibly develop, and this breakout kind of worries me. All right, but we didn't break out. We're not broken out yet. We're going to look still at the breakout. Now this still worries me because based off of the daily time frame, I see some structural change in the market. Let's go back to the daily. So I'm seeing some things that are telling me that there's some structural change here, and we may be looking at a move to the upside, but I'm going to still continue to trade the signals that I see and what's going on with the market based off of Ichimoku and the bias. Okay, I can't guess the market or estimate the market, but there are signs that I'm seeing based off of our fractals that there's a possible change of direction here, and that's what fractals represent, change of direction. All right, so back to the 4-hour time frame. Now we go back to our 4-hour time frame. Now let's talk about our trade that we're looking at, the trade setup that we're looking at. All right, price already broke out of the cloud here. So you could see that was a good Kumo breakout, but based off of the way that I'm showing you, we want to take in that trade. We want to stay safe. So we want to take the breakout to the downside. Well, currently, let's get a little bit closer here. Price attempted to break out here. Now this was a slight breakout, but you're getting a little pullback, but we could still call this a breakout because price is inside the cloud right now, closed inside the cloud for the past trading session as the market closed on Friday. So we're looking at the market opening on Saturday. On Sunday. What I would like to see is the market open up somewhere like this. If this market could open up somewhere up here, that would be nice, because a lot of times we've seen the market, what it's been doing is recover those gaps. So it opens up here, but then just recovers and continues with its move to the downside. And that's what we're looking for, a downside trade here. Okay, because what we're looking at now, price could quite possibly move back up to this area here. You may see price retrace, get back up to this area, but once it comes outside of that cloud and closes outside of that cloud, we want to take the breakout to the downside. That's going to be a Kumo breakout. All right, so we call that a KBO, Kumo breakout. So we're going to be looking for the KBO to the downside, and when we get that, we're going to trade it. Now, in order to be a breakout, a lot of times there's times you'll put a level here and you'll just trade when the market gets to that level. To me, a breakout is a breakout when it closes below the level. So we want to see the market basically see it close below the cloud. It's inside the cloud now, and when it closes outside of this cloud, anywhere outside of this cloud, we want to take the trade to the downside. All right, now I trade a lot different than a lot of people because I have a big stop loss, but I'm going to tell you how to keep your stop loss lower. I do use the fractals as my stop loss, so that would be my area. All right, or you can use the previous fractal break, because the market likes to retrace back to those levels, so it could retrace up into that point. So I would have my stop loss a little higher. So you can just follow Kijinsen. All right, so just follow the Kijinsen. You have to follow either Kijinsen or these fractals. Now sometime I do say that when you have a breakout, so say we get a candle, say the market opens up here and then the candle comes down here and closes, I can put my stop loss above that candle, because if I get a breakout, I don't want to see the market coming back against my breakout. I want to see the momentum and the strength that the market's going to continue to the downside. All right, I don't want to see the market coming back, because if the market's coming back, I don't have the momentum that I need. All right, so I want to see a breakout where it continues to the downside, not comes back after me. But the way that I like to keep trading is to follow my fractals or follow Kijinsen. All right, and that will give you a big stop loss. Okay, so you have to decide if that's going to be right for you. Now, a lot of times, if you can't take a trade based off a stop loss because the stop loss is too big, it's just a trade that's not for you. I always tell members that a great trade is not always a great trade, because what could be a great trade for me is not a great trade for you, because maybe my risk reward, maybe my risk management and my money management allows me to take a trade that has a 100 pip stop loss, but maybe yours only allows you to take a trade that has a 50 pip stop loss, so you can't afford to take that trade. All right, so therefore it's a great trade for me, but for you it's not a great trade. It's a bad decision if you take that trade based off of your money management and you know that you can't afford it. That becomes a bad trade for you. And it's still a great trade for me because I can afford that. Now, maybe someone else can afford higher than what I've just said, so it would be a great trade for them also. Now, that's the main thing you want to look at. If you can't afford the stop loss level, then don't take the trade. Definitely don't take a trade if you cannot afford the stop loss level. And most of the stop loss levels have to be technical. What I'm always saying is you can't say, okay, well, if this breaks out right here, I'm going to put a 30 pip stop loss. So say we follow this breakout and it breaks out right here and it closes right here. And you say, well, I can afford 30 pips, and your 30 pips ends up being right here. That's not a logical stop loss. That's not even technical. That's not a very good stop loss, because the market could easily retrace up to that point. Maybe this would be at least even better. All right, because at least you have a couple things to help you here. You have the Kijinsen, the Kumo here, which is going to be resistance point, and then you have this previous high here, so that's going to be another thing to help you. All right, so that would be more logical than saying, well, I could take a 25 pip stop loss, or I can take 50 pip stop loss. You don't take a stop loss based off of a number that you say you can afford. And I just you're probably thinking I'm contradicting myself, but here's what I'm trying to tell you. You may say, well, I'm going to be able to afford a 30 pip stop loss. Well, you can't take a trade if the stop loss isn't technical, and the technical level is higher than 30 pips. All right, so the technical level could be 60 pips, but you're saying you're going to take a 30 pip stop loss based off of what you can afford. You have to base what you can afford off of the technical stop loss. Now, if you can't afford it, you can't just place a stop loss because you can say you can afford 30. You have to be able to afford that technical stop loss, which would be the 60, right? Not the 30 that you're saying you can afford, because the market can easily come up to that level. And yes, it could come up to the 60 also, but it's just giving you more strength and more room for the market to move. You know, that's like me saying, well, this candle closed here, I can afford 10 pips. I'm going to put a 10 pip stop loss. What's wrong with that? There's nothing wrong with that, right? Yeah, there is something wrong with that. It doesn't make sense. It's not sensible, because the market can easily move 10 pips backwards. It has to be more technical. All right, so that's what I'm trying to say about about setting your stop loss. All right, so let me end up telling you about this trade and how we're going to look at this here. So I already told you that we want to trade the downside move, so we're looking for the breakout here. So I already told you if we break out below this level, breakout to me is close, so I want to close below that level. Now, some people are going to take the break, which is going to be just a wick that comes through that level. So a lot of times you'll see a market come. So say the market's right here, and then this is the candle body, right? And you could see a lot of times that you might get a wick like that. Now, it's not going to be a big candle like that, but you may see a wick that pierces through that level and then comes back up and closes up here, and you're in a losing trade, because really a breakout is not a breakout until the close of that level, not just the break of the point. I mean, the break is not a breakout till it closes. All right, so you want to get it to close. But now you could, if you're a risky trader, you know, everybody does different. So, but the level that we're looking to trade now, if the market doesn't move much, it should break out somewhere down here, depending. But you could also use this level to trade below. You could put an entry point here, depending on how far the market moves. So let me get this straight here. Okay, so the market doesn't move too far from this level and gives you candles like it's giving you right there. Then you could just take the break of this low level here and trade that and put your stop loss above that point. All right, so your stop loss, if the market does this now, you could put a stop loss here. This would be your entry. So if the market doesn't even move higher than this level, then you could take the break of that level. Now if it moves higher than this level here where we have that high, then you want to probably scratch that and just try to look for the breakout, because your breakout may give you a better entry than down here. The breakout may come up here somewhere. All right, so we want to watch out. We're just watching out for a breakout. So the things that we really look for are signals. We got, it's the first thing is going to be price. Price is going to be based off of where is price located. Is price above the cloud, in the middle of the cloud, or in the cloud, or below the cloud? Up here, this is a bullish market if price is above that. All right, and here this is neutral, and down here we're bearish. Okay, and I can't write too good, but that's what we are. We're bears right here below the cloud. So below this point we're bears, above this point we're bulls, inside here we're neutral. We have no bias. All right, so our signal right now, we have to have 4 signals, and one of them is still neutral. It's inside the cloud. That's price. And then when it breaks out, we're going to have all signals. So that's one signal. So I'm going to mark the signals. That's price is one signal. Your future is another signal. All right, so you want this Kumo twist here. This is a twist. All right, you could see where it crossed over right here. You had a crossover right here. So this is a Kumo twist, and this is your sync out span A and B crossing each other. All right, so that's a bullish. That's now a bearish sign. All right, and people say that it doesn't matter what color the cloud is. To me it does, because if you look at the color of the cloud, you know what the bias is in the market. You know that now this is a bullish future, and when it's red, it's a bearish future. I know this is a bullish future, this is a bearish future. So that's important. All right, so that's important to know. The next thing is we want to have a crossover, a TK crossover that's going to be bearish. So we want bearish signs to be trading to the downside. So we have one bearish sign right here. This will be our last sign. So we have another sign right here. This is green line right here crossed over the blue line right here. This blue line is your Kijinsen, and this green line is going to be your Tenkan-sen. That's a TK crossover. When the green line crosses below, that's bearish. When it crosses above, that's bullish. We are now bearish, so that's signal number 2. And then our confirming indicator, which is going to be this little dashed line that you see here moving throughout. This is going to be our Chiku span. All right, so we want to see where it is now, not back here. We want to see where it is now, and right now it's right here. All right, so Chiku span needs to be below price, and it's below the current price, which lets me know a few things, because Chiku span follows the current price. So it's always going to be exactly across from where the current price is, exactly. So it would be right here. My line is crazy. Okay, I can't draw straight, but that's where Chiku span is. So if price is right here, Chiku span will be right there. But the only thing, it's going to be 26 candles to the behind it. All right, so if Chiku span, if price is right here, Chiku span is going to be back here, 26 periods behind it. All right, no matter where we are, every time a new candle, Chiku span is going to move. So once we get a candle down here, Chiku span will be 26 candles back, and it'll be right over here, right with it. So it follows it. So what's the purpose of that is a lot. The logical thing is, if I am 26 periods, I start right here, and 26 periods later I'm still right here, you know, even though the market went higher and stuff, that kind of lets me know that I'm ranging, I'm going sideways, I'm not getting much movement out of here. I'm not in a trend, that's for sure. But 26 periods ago, if I was here and now I'm down here, that lets me know that I am moving to the downside instead of going to the sideways move. All right, that lets me know I'm not ranging, I'm trending to the downside. So therefore, that's why Chiku span is so important. All right, so you want to know, you really want to know where Chiku span is, and let that be one of your last determining factors. So we have this. You have your Kumo twist, which I call your future. Your future is dark. So with that dark future, the way I look at it is this: if you have this future here is bullish, which is a bright future, so it's a bright sunny future, so you have the sun shining, all right? And when you have the sun shining, I can't draw, I guess. You got the sun shining, then it's hot and sunny. But then when you get down here, you got thunderstorms and a lot of rain. And the market is moving to the downside, and you could see the rain coming down out of this cloud. All right, so therefore we want to be going to the downside because we're pouring down rain, we're pouring down price, we're pouring down pips. All right, and that's what we want to be catching, that pouring down of pips. When the sun is shining, the sun is pulling these rays up, and that's where the market is going, and that's where we want to be going. All right, so you want to always be following your cloud bias and understanding that, and that's why I'm setting my trade up based off of that. So I told you we had this future, which is bearish. Price has to come out of the cloud, which is going to be bearish. Right now it's neutral. We got a TK crossover, that's bearish, and Chiku span below price is bearish. Now Chiku span could find some resistance here at the bottom of this cloud here, and it needs to break through. The best kind of trade is when price right here and Chiku span right here have nothing in their way. All right, so the move to the downside would be very strong. Nice trade to the downside. All right, so we just talked about where we're going to enter the market based off of the 4-hour time frame. Now I want to show you where our targets are going to be. All right, so I'm going to show you my target based off of the daily. All right, so I'm going to go to the daily to show you the target. So we're going to go to the daily, and I just use support and resistance levels to go to the target level, and this is going to be a big target here, but the way the market's been moving, we're going to look at it. But I also have another strategy that I can really teach you how to follow and make sure you maximize your profit with stop loss, and this is going to be our target. We're going to look for the market to break out of that cloud and come down to that level. All right, so that's going to be your target down here, the bottom of this point here, which is around 151. So you go to your chart, make sure that level, put a horizontal line, that's where you're going to look for your target. All right, I don't see the exact level because I have to zoom in tight, but I'll set this all up, and then that's what it's going to be. So that's what I'm looking for. That's what this trade is going to be. It's going to be Euro New Zealand dollar on the daily time frame. Looking for the 4-hour Kumo breakout. Hopefully this has helped you guys a little bit. Currently, guys, I'd love to see some of you become members because we have a very strong chat room, which is very active and live, and we do have a lot of videos every week, and every day we go to a live session where we just talk about the whole market, look for trading opportunities that are developing currently, and we talk about those trades and how we're going to set those up. And a lot of times in the chat room we set up a lot of trades. Then we also have our forum, so we got a lot of things for members right now. We got a lot of videos, things of that nature, and my pricing is reasonable, guys. It's not ridiculous. Okay, you find a lot of these people charging ridiculous prices for things. I don't think some things are worth the price that people pay, so I'm not trying to rip anyone off, trying to help everyone. So this is good. That's a purpose for you to come over to FX at one glance, become a member, get involved with our chat room, our forum. The chat room is really booming, so like I said, we have a chance to see you guys in there hopefully. But other than that, guys, I'm pretty much done. I think that's our trade setup. That's what we want to be looking for. So that's going to be your Euro New Zealand dollar Kumo breakout to the downside. So it's a bearish Kumo breakout. You want to catch that. So when the market opens, be looking for that. All right, so hopefully this helped you guys out. Until next time, guys, have a great one, and God bless. So long.